Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This Simply Talks with another video, and a very happy Diwali to all of you, whoever is watching this video. Today is a Diwali special video, five stocks that I believe are going to do extremely well over the next decade into different business area, and they are coming at reasonable valuations, and that's why I picked them from the mid cap, small cap space. These are the five stocks I believe that are coming at reasonable valuations and can perform on a consistent basis over the next 5 years or so. But you need to uh, go through their numbers periodically, every 1 or 2 quarters. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should delve with their own due diligence and research. And I'm not in favor or against any company that I talk about. I'm not a member of the NSE or BSC. I'm not a portfolio advisor. I'm a retail investor, and whatever I have learned over the last, you can say, 12, 13 years being in the market, I'm imparting that knowledge through these videos to you all. So whatever decisions with respect to investments in any asset class you take, kindly do consult your financial advisor. Kindly do understand that there are market risks involved. The market can go either way, and you can lose a big amount of money. So that's the call. So and any investment in any asset class is laden with market risk. Before I talk about these five companies, here's a small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. You'll have access to my portfolio. There'll be on a bi-weekly basis watch list that would be updated, analysis on different companies, sectors, discussion on domestic and global economy. You'll have you can ask me queries, any number of queries on there as well. So you can support me on Patreon. You can follow the link and probably email me if you want a WhatsApp membership on a yearly basis. You can email me for that. So in order to understand about these five companies, let me take you to the screener website. So you can see at the top that the five companies I want to talk to you about are Landmark Cars, which is a 3,000 crore market cap company; Elon Engineering, a 10,000 crore market cap company; Global Health Limited, or you can say Vedanta Hospitals, the one that owns Vedanta Hospitals, recent listing, 25,000 crore market cap company; Intellect Design Arena, an IT firm that has been producing decent numbers in a very difficult environment, and we'll discuss about its business as well. So a 9,000 crore market cap company here. And KEI Industries, which is in the wires and cable space, and 2 3 quarters have not been that great, up and down kind of quarters, and that's why the stock has been consolidating. Looks good at these levels. We'll discuss about this as well. So let me just begin with the Landmark Cars. A 3,000 crore market cap company that got listed about a year and a half back, or something like that. Incorporated in 1998, Landmark Cars is the leading premium automotive retail business in India. They have dealership of premium cars, and what I have understood is that over the next decade or so, there will be a situation where people who are in the upper middle class will shift towards premiumization and buying into premium products, whether it's watches, cars, etc. So I think this business could grow, and this field or this sector could grow big time. So they have dealerships for Mercedes Benz, you have Honda, Jeep, Volkswagen, Renault, etc. Very decent company, as I said, a 3,000 crore market cap, at 36 times, not expensive earlier when it was listed and was moving around before the first results that came out. It was trading at 50, 60 times. Now the valuations have become much better. And in terms of price to sales, it's less than one time price to sales. If you look at in more detail as to what the company does, the company operates on two business models. Uh, Facilitating sale of used vehicles through agents on a commission basis, and second is taking vehicles on books for sale after any needed refurbishment. So basically used cars in case of high-end cars, you would say luxury cars that they sell into. The company also receives you can say incentives from its original manufacturers, for used vehicles traded for new vehicles, etc. It has a market leadership in this sort of a business that it is doing. At the moment, the margins are pretty decent in there. They have an integrated business models. The company has around 112 outlets in 8 Indian states, comprising 61 sales, you can say, showrooms and outlets, and 51 after sales services. So that's how it is. OEM brand, sales outlet, service outlet, etc. In Mercedes Benz, they have around 8 OEM brands and a sales outlet of 13 and 21, and so on and so forth. In terms of geographical presence, if we see, then Landmark Cars, the vehicle dealership network is spread across 31 cities in eight you can say states and union territories, including Maharashtra, Uttar Pradesh, Gujarat, Haryana, Madhya Pradesh, Punjab, West Bengal, and the National Capital Region, that is the NCR. So they have a diverse set of business that is probably spread across India. Number of new vehicles sold is around 19,000 in FY22, and number of vehicles, you can say, serviced is more than 2.7 lakh. So or you can say 270,000 or so. In terms of revenue bifurcation, Mercedes-Benz contributes around 22% of the revenue. It was 33% in FY21. Honda is around 17%. It was 21% earlier. Jeep is around 25% versus 14%. Volkswagen is around 10% versus 6.5%. And Renault, against in FY21 being 13%, is now 11%. So in Renault and Mercedes-Benz, the share has come down, but they have diversified their business by having more models in Honda, Jeep, and Volkswagen, which is pretty good. They are expanding into EV segment as well over the next 2 to 3 years. So overall, if you see the market cap 3,000 crore, less than one time sales, 36 is its P. The P is around 35, 36. Trading at around 750 rupees. If you look at the chart, it shot up sharply. So if I see here, the listing came in December of 22, so it has been probably a year, nearly a year, not that long back, and the stock has gone from 440, 450 levels to 800. So went up 70-80% even after listing, and now has been consolidating. In terms of PE ratio, again, as I mentioned, it was earlier trading at around 38, 37, 38 times, has dipped a little bit. uh, Now let's just look at the numbers. So 770 crores of sales in this quarter, September quarter, versus 850 crores of sales, dipped a bit. Probably in the monsoon season it does. The margins have remained stable at 7%. Operating profit has come down lower by around 10%. And overall, you can say profit came out to be in September, it was 17 crores versus 20 crores because of this tax figure. Because in FY22 in September, they had a tax of around 30%. It was a reverse tax of 10%. So 24 crores profit before tax have become 19 crores, and that's why the stock hasn't done that well. But if you look at the balance sheet, again, in the balance sheet there are borrowings that is in there that has been increasing, and these are the reasons why the stock has not done well so far. Why I believe that the company can do well is because this sort of a segment is going to grow extremely fast when we talk about upper middle class gaining more momentum in terms of earning more over the next decade. And that is why I feel that rather than buying into new cars, they would get 30, 40%, 25%, 30% discount on refurbished cars of such nature. I think this is a business that could take off big time over the next decade or so. And that's why I feel having a market cap to sales ratio or price to sales ratio of less than one should not be sustainable over a long period of time. This should improve going forward. Uh, if you look at the shareholding pattern, then FIIs currently hold around 8.5%. They dipped a bit from 10.5%. Promoter hold 53%. DII holding is strong at 15.5%. Public shareholding is around 23% in here. But if you look at overall thing, then around 6.5% or 6.3% is with large, you can say, investors, HNIs, etc. So that is where I suppose that the overall public shareholding is less than 17% in here, which is a good sign that large investors are holding on to the stock, and that is why the stock do not fall a lot. It's down somewhere around 11-12% from the top, even after numbers showing degrowth year on year. So a decent company, I won't like to give any targets or not, but can give decent returns hopefully over the next decade. Do your own analysis and take a call on this. Second stock in the list is Elon Engineering. Now this is into an engineering. This is an engineering company that provides, you would say, design and manufacturing of material handling equipments. So basically, this is a company, and I have made a separate video on Elon as well. I believe over the next decade, this could do well if Indian economy does well. If old economy plays really do well over the next decade or so, there's construction work, etc., that continues to happen, which I feel will happen. I think this is something on declines that could be looked at, probably 8 to 10% fall from these levels, 10-15% decline. This is something to invest probably into over the next 10 years. Looking really good. 35 times earnings at the moment. I think going forward you could see the stock, if it comes to around 30 times earnings, it would be pretty interesting at those levels. 900 rupees is the price at the moment. It's trading at highs, and the reason for that has been the numbers. So if you look at quarterly numbers, you look at consolidated September numbers, 485 crores of sales, you see here, with margins of 24%, and operating profit of nearly 120 crores versus in September last year, 390 crores of sales and operating profit of 93 crores with margins similar. So margins remaining stable, but the growth has been nearly 26-27% on profits, 20-21% on sales is a pretty strong thing. And eventually net profit shot up from around 65 crores to around 89 crores, even after giving more tax in terms of percentage, 24% versus 22% in this year compared to last year. So looks good. On the balance sheet front also, 1400 crores of reserves versus around 50 crores of borrowings is a pretty good, pretty adequate. Shareholding pattern being around 60% promoter shareholding. FII do hold a long chunk. In fact, a big chunk they bought in the September quarter from 2.8%, that has grown to around 4.9%. DIIs also, the stake has gone up, and it is the public shareholding that has come down all the way from around 37% 2-3 years back to 32.5%. If you look at the public shareholding split also, there are about 3-4% that are with large investors. So basically around 28-29% is with the public shareholding, others are in the large hand. And now let's just discuss a little bit about the business so you'll have more understanding. So they make material handling equipments and aircraft carriers. Through the acquisition of Benzels and Radicon Group, they make aircraft carriers as well. In terms of products and services, power transmission products, carrying major power transmission products, say cables, lines, etc., poles and all. They help with equipments of such, so that bulk chunk of such products are carried. Then there are also material handling equipment solution for the cement space, for metals, etc. Large amount of metal, cement, concrete, etc. can be taken from one place to the other, and that's the kind of, you can say, products that Alicon provide. So it's a pretty interesting, you can say, business altogether. In terms of market position, it is one of the largest, you can say, industrial gear manufacturers in Asia, holding a market share of, you can, in industrial gear in India of 36%. So all these material handling equipments, or material handling, you can say, auto products that are there, most of them use gears of Elon Engineering. That's how it is. In India, they have business of around 65%. Outside India, it's 35%. And their clientele include Ultratech Cement, Shree Cement, Wonder Cement, NTPC, IFCO. So it's pretty decent. So what I feel is that it's stretched at the moment because there has been a lot of government oriented, economy oriented, real estate infrastructure oriented stocks that have run up. Wait for major declines in the market, and when you get these kind of stocks 10, 15, 20% lower from current levels, that's where you need to jump in and keep accumulating. I think these prices are slightly steep for the business we are looking at. So after Landmark Cars and Alicon Engineering, the next in line is Global Health. Very interesting company if you want to play the hospital industry, and the fact that over the next 10, 15, 20 years we are going to have a country of people who would be more older than younger, say 20 years down the line. This is a stock not even for 10 years, I would say 12, 15, 20 years investment. Global Health being a 25,000 crore market cap company at a PE of 60. Uh, it's trading at 900 rupees, coming out with strong numbers, and that's why the stock is not falling at all. Again, valuations are stretched in here. Keep accumulating on declines. That's the call. And on major market fall, these are the kind of stocks that you need to look at. So, what does Global Health do? Global Health Limited is one of the largest private multi-speciality tertiary care providers operating in the north and east region of India. The company has key specialties in cardiology and you can say cardiac science, neurosciences, oncology, digestive, and hepatobiliary. So this is quite an interesting hospital unit that we are talking about. We have Max and we have this, and this is basically is your Vedanta hospital kind of business. So hospital count, Global Health has five hospitals in operation in Gurgaon, Indore, Ranchi, Lucknow, and in Patna, and one hospital under construction in Noida under the, as I said, Medanta brand. So this is the big thing. Medanta brand is big in here. Company provides healthcare services in 30 plus medical specialities and engages 1300 odd doctors and even more. So this is a very profitable kind of business we are talking about. And since this is something that is required by everyone, once somebody gets older, if you are even fit at the younger age, eventually you'll require 90%, in 90% of the cases, unfortunately hospitalization is virtually imminent, and that is why it is trading at 50, 60 times, 8 times you can say price to sales, etc. And the stock has zoomed even after, you can say, this quarter numbers. So 844 crores of sales versus 680 crores of sales, operating profit of 150 versus 150 crores last time around, 150, 160, this time around 210 crores. Margins have expanded from 23% to 25%. Eventually, net profit growing by nearly 50%, 40, 45%. Very strong numbers. And if these numbers continue, I don't think valuation will come down. But there could be market situations in which the market falls 8, 10%, and these stocks you can get 10, 15% lower. And that's where you need to get at. In terms of balance sheet, again, no debt whatsoever, very strong company, and shareholding pattern 33% promoter holding, 10.7% FII holding, DII hold nearly 11%, and there's 45% public shareholding that we see here. But in those 45%, we have 28.25% with large investors like Sunil Sachdeva, etc. And so that's 28.2%, and then you have more large investors in there. That accumulates to somewhere around 8.6 plus 28, so that's 34 and a half or so percentage with large investors in public shareholding as well. So around 11 to 12% is the free float in here, and that is the reason why on huge big numbers the stock is performing so well. So that's my Third pick in the list, global health. I think over the next decade can do extremely well going forward. Fourth in this list is Intellect Design Arena. Very interesting company, 9,000 crore market cap. P of 29 it is trading at, not very expensive considering its historical P. The company is producing decent numbers. Last quarter numbers have not been that great, and that's why the stock, after going to 700, 720, has come down. Uh, so this is a, you can say, works globally in the field of financial technology for banking, insurance, and other, you can say, financial services. They provide IT help in that, you can say, domain. In terms of the products offered, Intellect is, you can say, structured with two banking verticals, IGCB and IGTB, catering to specific banking needs. And recently, the IRTM unit merged with IGCB. So that's what happened. In terms of business model, the company operates in three different, you can say, models: a traditional product sale model that they produce, customer centric partnerships they do have, plus they are right now having cloud deployment and subscription based, and their cloud business is picking up big time. So company offers products and platforms on the cloud deployment model, earning revenue through licensing, cloud setup, hosting, and subscription fees linked to customers. So this is something that has grown over the last 2 3 years. In terms of geographical split, India business accounts for 39%, export is 61% currently. The company has been ranked as the number one leader in the retail banking for the sixth consecutive year, and is recognized as a global leader in product, you can say, breadth and retail lending. Additionally, they hold the position of regional leadership in the ASEAN region in their businesses. So it's a pretty decent, you can say, set of businesses that they are into in the IT domain. 9,000 crore of market cap, 3.7 times sales currently, and currently the stock has, you can say, corrected from the top by around 12%, 11, 12%, coming at reasonable valuations. Remember that IT is going through a very difficult phase, and this is the time to really get into it if you find out top notch companies in the mid cap space, because eventually this cloud of, you can say, global economy will fade away, and there will be some sort of a growth that will be better than what US and Europe is producing at the moment. So over the next decade, I think these mid-cap IT companies could end up doing well. In terms of September quarter, 620 crores of sales was okay, but margins dipped. So we were hoping for margins to be around 23% or so, 23, 24%. It came out to be 19% last time around, although it was 15%. So it looks good. But we hoped for 22, 23% margin in here. Eventually, net profit of 71 crores. Uh, Against, you can say, 46 crores is still a growth, big time growth, a year on year, but quarter on quarter we have dipped, and we hoped that it would have remained stable. So that's why the stock did not do well, but I think at these levels, uh, it does look pretty decent. In terms of balance sheet, again, as in with other IT companies, this looks pretty stable, debt free company. Shareholding pattern: 30% promoter holding, FIIs hold 24.5%, which has consistently grown over the last 2 3 quarters. 3.9% DII holding after the September quarter numbers. After September shareholding pattern that has come out, public shareholding is around 41.3%. So it's around 38% that the public hold. And so that is how this Intellect Design is stacked up. I believe that in the mid-cap IT space, there are some mid-cap ITs that have gone up big time, like Birlasoft, etc. But this stock has been consolidating, and the results have not been that bad. So this is something to look at from one decade perspective. The last in the list is KEI Industries. Now, this is in the cables and, you can say, cable space, and you can say electrical infrastructure space. And this is a real estate ancillary play. So if you don't want to buy into real estate stocks and you feel that there could be A number of reasons for that, that there could be a big fall in the real estate industry altogether. You play it through ancillary space, and KEI is one of them. A decent larger mid cap company or larger small cap company into the mid cap domain, 23,000 crore market cap. Yes, trading at 43, 44 PE, which is stretched. Again, this is a stock to buy on declines. If you get it around 2100, 2000, these are good levels to buy. At these levels, I would say wait it out, wait for market correction to buy into. Yeah, if you look at key points for the company manufactures and markets extra high voltage, medium voltage, and low voltage power cables. It caters to retail and institutional markets and also provides engineering, procurement, and construction like EPC services as well. So basically, their profile includes extra high voltage, low voltage cables that we've talked about, control cables, house wires, single core wires, you can say multi core wires, etc., communication cables, instrumental, thermocouple cables, solar cables, etc. Many other products. So there's a lot of you can say product divisions that they have. They have EPC services as well. A company has an order book of nearly 3,500 crores, including EPC orders till FY22. That was the order book that the company was having. In terms of customers, it addresses the cabling requirements of various sectors like power, oil refineries, railways, etc. HSBC, Infosys, etc. are some of its major customers, and it caters to both the retail segment comprising wires, you can say house wires, winding and flexible wires, etc., LT power cables also. In terms of revenue breakup in FY22, so LT cables is around 41%, house wires and cables is around 27%, HT cables is around 17%, high voltage kind of or low voltage, high voltage kind of you can say wires contributes to around 9 to 12%. So that's how uh, the division has panned out. Uh, it is working at 91% capacity utilization, which is pretty good. Now let's come to the numbers part. So basically, uh, in the you can say in the September quarter, they had around 2,000 crores of sales, 1950 crores of sales. If I may, I'll just look at the consolidated numbers. 1950 crores of sales versus 1600, 200 crores of operating profit, which is a jump of good 22-23% versus 160 crores. But you have to understand that a stock trading at somewhere around 40-44 times should grow at 25% or so. Slightly lower, the growth has come out to be slightly lower in terms of net profit. Yes, they have grown at 30%. That's why the stock has not fallen a lot. I think the growth could taper out over 10 years, and that is why the growth could be on the sales front, the growth could be around 20%, 18-20%, and that is why probably KEI is a buy out on a 10-12% decline. I think if you can get it around 2200 to 2000 levels, those are good levels to probably invest into. So this was my video, a Diwali special for you all. That some of the stock that could be that could be bought from a 1 decade perspective or even longer. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.